Navigating the global financial chessboard, what China's Treasury moves mean for crypto. As a quick introduction, hey there, I'm Brett Fogle from Moonstream Crypto. Today I want to share something fascinating that's happening in the global financial market that could really impact your crypto investments. You know how sometimes the most important market signals come from unexpected places? Well, that's exactly what we're seeing right now with the US Treasury bonds. The Treasury Department just released a report that's caught many analysts' eye by surprise, and it contradicts one of the most popular narratives in financial media today. So let's break it down. The surprising Treasury report. For the past couple of years, we've been hearing that countries like China have been dumping U.S. Treasuries, essentially selling off their holdings of U.S. government debt. This narrative has fueled concerns about the dollar stability and has been cited as a reason to invest in alternative assets like Bitcoin. But here's the twist. The latest Treasury report shows that foreign holders of U.S. Treasuries actually increased last month. This directly contradicts the popular de-dollarization narrative that's been circulating and we've been talking about for over a year as well. What makes this particularly interesting is that China, which had been allowing their Treasury holdings to mature without replacement, similar to what our own Federal Reserve is doing with quantitative tightening, appears to have changed course. Why this matters for crypto investors? Well, I'm a crypto guy talking about Treasury bonds because understanding these macro trends gives us crucial context for crypto markets, believe it or not. First, this suggests that despite all the talk about the dollar losing its reserve currency status, major foreign governments are still buying U.S. debt. That's a vote of confidence in the dollar system. Second, if foreign buyers are stepping in to purchase treasuries, this could also potentially offset some of the effects of the Fed's quantitative tightening program, which has been moving and removing liquidity from the markets. For crypto investors, this creates an interesting dynamic. It challenges the narrative that global powers are abandoning the dollar system. It also could signal that global liquidity might remain stronger than expected, which would be good for crypto. It reminds us that market narratives often run ahead of actual data. So, reading between the lines, now we need to ask ourselves, why would China reverse course and start buying treasuries again? One possibility is that they're concerned about their own economic slowdown and want the safety of U.S. government bonds. Another theory is that with U.S. interest rates at a multi-year high, treasuries simply offer attractive yields compared to other sovereign debt. Or perhaps a more strategic angle. China might be trying to stabilize the yuan-dollar relationship during a period of economic uncertainty for them. What this means for your crypto strategy? Well, for crypto investors, this development offers several key important takeaways. So first, don't base your investment decisions on popular narratives alone. The de-dollarization story has been everywhere, but the actual data tells a more nuanced story. Number two, watch global liquidity conditions. If foreign buyers continue to absorb U.S. debt, this could create a more favorable liquidity environment than many expected. Consider correlation risks is number three. If global investors are seeking safety in treasuries, this could temporarily reduce appetite for risk assets like crypto. And number four, look for divergences. When market narratives and actual data diverge, it often creates opportunities for informed investors. So, here's my take on what's next. I believe we're entering a period where understanding these global macro relationships will be more important than ever for crypto investors. While Bitcoin and other cryptocurrencies offer an alternative to traditional financial systems, they don't operate in isolation from it. Global liquidity flows, interest rates, and reserve currency dynamics all influence crypto markets. The fact that China and other foreign entities are buying treasuries again doesn't necessarily mean they've abandoned any long-term plans to diversify away from the dollar, but it does suggest that the process may be much slower and more complex than many have assumed. For your crypto portfolio, this reinforces the importance of taking a measured, data-driven approach rather than making decisions based on popular narratives alone. As we navigate these complex market dynamics, I'll continue monitoring these trends and sharing insights on how they might impact our crypto investments. What do you think about these treasury developments? Do you believe it's significant for crypto markets? Drop your thoughts in the comments below. And if you found this analysis helpful, please hit that like button and subscribe to the channel for more insights on navigating these crypto markets in this evolving global financial landscape. It really helps. This is Brett Fogle from Moonstream Crypto, helping you make more informed investment decisions. And like I said, if you like this video, please make sure to like and subscribe with notifications on to ensure you don't miss a future video that might be important. Plus, it really helps us get this information out to more people. To learn more about our newest service, Moonstream Academy, with timely market training videos, a members community, and a way to ask me questions personally, along with video modules on the best of what I've learned investing over 25 years, go to moonstreamacademy.com/start. Hope to see you there.